Hold on tight because what I'm about to show you will blow your mind. The Federal Reserve is being forced to act by the way XRP is moving, and the most recent data shows that there is a huge problem going on below the markets. We'll talk about XRP, Bitcoin, Ethereum, and the whole crypto sector, as well as how it all connects to stocks, bonds, liquidity, and the Federal Reserve. This is important to pay close attention to if you have any crypto. What's happening now is not just noise, it's setting the stage for the next big market wave. This is not advice about money. XRP is now worth $2.89, which is more than 2% more than it was this morning. Bitcoin is down about 1.72%, and Ethereum is down about 3%. However, the S&P 500 is up for the day, which is interesting. Stocks going up while crypto goes down isn't something that happens very often, so when it does, it's a sign. The big picture here is how standard markets and digital assets aren't working together. They move together most of the time based on financial conditions. But they are now moving apart. This means that something is moving below the surface. So make sure you get it after we go over this XRP analysis. You won't want to miss what's inside, trust me. Let's go back to XRP and the market as a whole. We should talk about what the Fed is facing at the moment. Just now, we got new figures on U.S. jobless claims. 230,000 expected versus 237,000 real. That's more than expected, which means that more people are applying for unemployment. That's a sign that the job market is getting weaker on its own. This kind of information makes the Fed more likely to lower rates. Why? The Federal Reserve is more concerned with stopping the economy from slowing down too quickly when the job market is weak. They are less concerned with inflation rising. When rates go down, it becomes cheaper to borrow money, and risky investments like crypto do very well. But here's the catch. It's not just work. The very thing that keeps the banking system going, liquidity, is running out. The Fed's reverse repo facility, or RRP, has shrunk to just $21 billion. This is where banks keep their extra cash. Just to give you an idea, RRP use has dropped by more than $2.5 trillion since late 2022, and by almost $440 billion since June of this year. That's a huge flow of cash leaving the market. Banks are taking money out of RRP to buy treasury bills because the U.S. government is putting a lot of debt on the market. That may make you wonder what it has to do with XRP, Bitcoin, or Ethereum. Everything. Because when there isn't enough extra cash, it costs more to borrow money, and markets get tighter. There is pressure on stocks. Crypto feels the stress. But here's the other side. This kind of tightening of liquidity pushes the Fed to act. Rates might freeze up soon if they don't cut them, and risk assets catch fire when they do cut. Also, don't forget that XRP is right in the middle of this. It's no longer just small players flipping coins. Institutions are moving around. There are already more than 1 million Bitcoin held by public companies, and there will never be more than 21 million. That's not including what banks and states hold. Figure it out. Every year, the float for regular people gets smaller. XRP is also being talked about in this way because its usefulness and settlement use cases are too good to ignore. This week, one of the biggest news stories was that Coinbase cut the amount of XRP it held. Based on data from XRP Scan, Coinbase used to have 780 million XRP, but now only has 199 million. In just a few weeks, that's a 69% drop. They used to have the 5th most XRP. They are now in 10th place. That's not a small move. People are shaking. The first thing that comes to mind is, oh no, Coinbase is dumping. That must be bad news. So let's break it down with reason. Why would an exchange cut the amount of XRP it holds in this way? 2 reasons are most likely to be true. So 1, many whales who had been keeping assets on Coinbase for possible sales, or as security started taking them off after the SEC case was over. Keep in mind that big whales don't leave long-term stocks on exchanges unless they need them for trading leverage or staking. If whales pulled out, Coinbase's reserves would simply go down. That's not Coinbase selling off. That's people moving money. The second option is that demand flow could change. XRP had a huge amount of activity earlier this year, especially after the court decision. However, demand dropped a bit when the price fell below $2. That makes exchange rates worse. Either theory makes sense, and neither one is a sign of disaster. People who hold for a long time think this is just noise in the short term. Also, guess what? Even with this news, XRP has stayed strong above $2.80. That's being strong. Let's see how this fits into the bigger picture. The fear and greed measure for crypto is at a full stop right now. That doesn't happen often. It means there are 2 equal parts of the market, not sure whether to be hopeful or bearish. That's exactly the kind of uncertainty that comes before a big move. Markets haven't done well in September in the past. Things have been rocky before. In this case, though, with liquidity getting tighter and the Fed being forced to cut rates, the spring is getting tighter and tighter, and the chart action backs this up. It looks like XRP, Bitcoin, and even Ethereum all want to sell after their 1,348 EMA crosses after going up a lot in the past few months. The bull is still alive. It means they're coming down from the parades. Bitcoin is about 11% less than its all-time high. XRP is down about 23%. Solana is down about 33% from its high point in the area. Some people might be scared by those numbers, but soldiers know what they mean. When conditions are right, pullbacks like these lead to strong continuation moves, and they are right now. There isn't a lot of money available, there's a lot of pressure, and there's now a 94% chance that the Fed will cut rates soon. It was 84% last week. When taxes are cut, new money can move into high-risk assets. It has to go somewhere, and when it's cheap, it goes up. Now that's crypto, that's XRP, that's where things are going. So let's look more closely at XRP's setup. While Bitcoin always gets the most attention, XRP's movements lately have been sending their own signs. Since it went through the $3 area and then fell below $2.81, it has been staying in a band that shows accumulation is taking place. Every time it goes down, people buy it. It gets stopped every time it tries to run. There will be an end to that tug of war soon. At these points where mood is neutral, prices are stable, and volatility is low, there usually comes a big break in one direction or another. Utility is the wild card. XRP is different from many other tokens that are only worth what people think they are worth. That's a game changer. Cross-border payments, settlement infrastructure, and real talks with banks about adoption. That, plus the fact that money is about to become cheaper again on a global level, changes the risk-reward picture, because projects with real use cases are always given the most attention when new money comes in. That's the reason XRP isn't thrown in with other currencies. It's its own different group. Just think about what we talked about with liquidity. The Fed's reverse repo balance has been falling sharply, with trillions of dollars leaving the system since 2022 and hundreds of billions leaving just since June. That's not a small change. Tectonic plates are moving beneath the surface. Because the U.S. government is filling the market with debt, institutions are moving cash from cash reserves to treasuries. That means there are a lot more treasuries on the market than ever before. Yields are going up, and buyers are moving their money to chase those yields. But that can't go on forever because the cost of that debt will finally be too high to pay. That's why the Fed no longer has much of a choice. The market knows this. Take a look at the odds. 94.4% chance that rates will be lowered. That sounds a lot like the market yelling at the Fed. We already know what you'll do. It's not good for the Fed to surprise the markets. They like to set goals and then work toward them. If the odds go from 84% to 94% in a week, that means the train has already left the station, the cut is coming, and when it does, the momentum boost will affect all risk assets, even crypto. This is where time is very important. Something is wrong if XRP is staying stable below $3, just as funding changes and the Fed makes cuts. First, markets are feeling better. Second, there is a new interest in high beta investments like altcoins. Third, the basics of XRP and how it moves through institutions. That's what starts big moves. Take a step back and look at Bitcoin's part in this too, since XRP doesn't move by itself. Bitcoin still has a lot of power, which means it sets the tone for the whole crypto market. As I write this, Bitcoin is just below support after its own drop. Around 11% less than its all-time high, but still well above its all-time high when you look at the bigger picture. In the past year, every correction has been a setup for higher levels. It still looks the same. Altcoins will follow Bitcoin if it gets stable and goes back up. XRP has always made Bitcoin's moves stronger on both sides. If Bitcoin takes off, XRP will not only keep up, it might even do better. Let's join another dot now. Adoption by institutions. We said that public companies now have more than 1 million Bitcoin. When you think about how few there are, 21 million, that number is mind-boggling. That's almost 5% of the whole stock that is owned by public companies. The government, ETFs, platforms, and whales all take a giant chunk more. What is left? A shrinking pie for the masses. And when quantity is capped, scarcity drives price. XRP doesn't have the same hard cap structure as Bitcoin, but it does have a locked-in maximum and a clear burn process on transaction fees. Every single transaction permanently reduces supply, no matter how small. That number times the number of years of real use shows the long-term picture. Float going down, demand going up. That's how it works. This is why short-term events like Coinbase cutting stakes shouldn't scare people who think about the long term. Take a look at this. If you hear that Coinbase lost 780 million XRP, you should think about why. It's good for the market if people take their money out and put it in private wallets. It means that more people are having long-term self-custodying exchanges where they take supply off the market. When markets supply off, there is less money available for dumping. That makes it possible for bigger moves when demand goes up. That's how markets usually work. In a broader sense, the September pattern is worth looking at again. In the past, September has been one of the worst months for both stocks and cryptocurrencies. There are many ideas about why. When fiscal quarters end, taxes are collected, cash flow patterns happen, and world events happen. But here's the catch. Some of the biggest rallies have actually followed rocky Septembers. Weakness, then strength. First pain, then gain. You get rid of weak hands in the chop, and then you strike when the Fed or macro catalysts come along. Because of this, you can't just see one red day or week and think the sky is falling. It has to do with placement. And placement is interesting right now. On one side, people are cautious, the markets are neutral, and EMAs are flashing sell signs. On the other hand, factors are making the coil tighter, liquidity is drying up, the Fed is about to cut rates, adoption is rising, and whales are taking assets off of exchanges. That's what a huge mismatch looks like, and when people are split up, markets move the most. Because when one side is shown to be wrong, they all quickly change their minds, which builds momentum. Let's look into XRP's latest price changes in more detail. Without a doubt, XRP ran hard after the SEC case became clear. There was a short time when it went above $3 during that surge. But those kinds of gatherings are always fun. Traders who bought early should cash out. Latecomers sell in a hurry. The group of true holders is all that's left. Right now, that base form is around 280. You can draw a picture of the collection zone on the chart. When it gets close to 270 or 280, a lot of people buy it. It's not a coincidence. That's how building works. The spring gets stronger as it holds this zone for longer, because there is an explosive move when buyers run out of money and the chart gets tight enough. It's kind of like squeezing a coil. The more you push down on it, the more violently it will break. That's what XRP is getting ready for now. Also, don't fall asleep on Ethereum. Today you're down 3%? Yes. But ETH is making its own triggers. Scaling at the layer 2 level, talking about ETFs, and ecosystem growth all add up. Bitcoin moves faster than ETH most of the time, but when it runs, it runs. What does this have to do with XRP? In other words, money moves between schools. When ETH goes up in value, other cryptocurrencies follow suit. As BTC rises, the balance of power changes. Alt season can start when both sides come together. That's the kind of macro setting we have here. Again, this has to do with cash because it can't be stressed enough. A drop in Fed rates does more than make loans cheaper. It has to do with feelings. It's about letting a lot of people in. It's not as appealing to hold trillions of dollars in bonds and money markets right now. Investors look for yield and growth. Stocks receive money, but what about crypto? Crypto becomes impossible to avoid because the gain is so big compared to other markets. Where do you put your money if you're a fund, desk, or company and treasury returns are staying the same while crypto is getting ready to break out? You decide where the imbalance is. And XRP is a big part of that. So the pieces are getting in place. XRP is coming together under $3. The price of Bitcoin stayed above its longer-term supports. Ethereum is still going strong. Tight liquidity, but a cut is coming. More Bitcoin than ever is held by institutions. Whales is taking XRP off of platforms. Fear and greed got stuck in the middle. All of those things are interesting on their own. They make a powder keg when put together. Also, keep in mind that it's not about guessing the exact day or time the move will happen. That's not how the market works. It's about being aware of the circumstances. Things are as clear as they've ever been right now. Pressure, positioning, and triggers are all coming together. That's why the next few weeks won't be easy. They are important. Because once that event happens, whether it's the Fed cut or something bigger, everything can change very quickly. That's where we are now. XRP less than 3. Not giving up. Bitcoin keeps an eye on key barriers. This is Ethereum pulling back, but it's not breaking down, putting liquidity in the center. They are also making moves behind the scenes in organizations. Many people aren't paying attention even though it's all going on right in front of them. The story is even more interesting when you look at it in the context of the bigger picture. This isn't just about one coin, one chart, or one exchange moving money around. We are seeing changes in the world's banking system happen right now, and XRP is right in the middle of them. Take a moment to consider what is occurring here. The Fed is in a tough spot. The economy is getting worse, but inflation is still there. Jobless claims are slowly going up. Credit conditions are getting stricter. The reverse repo mechanism is losing its liquidity. And the Fed has always responded the same way to stress in the past. All of these things show that the system is under stress. Lower the rates, let the money flow, spend less money. That is what makes risk assets take off. Add XRP's unique situation on top of that. Not another currency trying to cash in on the craze. XRP is closely linked to how it is used in the real world. Payment networks, banks, and cross-border settlement. It's not like other coins that go up and down based on guesswork, and the market knows it. XRP responds with huge volatility every time a new rule is made or when institutional flows change. That's because people know that its possible effects aren't just guesses. They have to do with infrastructure. Let's join the dots. Reserves at Coinbase are going down by 69%. Whales are taking tokens off of platforms. Sentiment that is neutral and shows uncertainty. Bitcoin is still the leader, but Ethereum, Solana, and other coins are all in adjustment mode. Everything here is a setup. When the next wave of capital comes in, which it will go to assets that have real uses and strong holders. XRP does both of these things. Also, most people miss this. Events in liquidity don't just have a direct effect on prices. They change how they act. In the case of treasuries, when they offer high returns, banks buy a lot of them because they are safe. But those bonds look weak when rates go down. Where does that money turn? You put money into stocks, growth plays, and yes, crypto. It's more important than any single news story because it changes the flow of billions or even trillions of dollars. If you ever wanted to know why Bitcoin rallies happen right around when the Fed changes its mind, this is it. The money is moving in a different direction. And XRP is in a unique position to benefit from that because its use case is tied to liquidity. It sounds almost poetic. When it gets easy to move money, the thing that was made to do that becomes more valuable right away. People are more than just numbers on a screen, so let's talk about psychology as well. There are ways people act. The crowd is split up right now. Fear and greed at a moderate level means that there are two sides to the market, bulls and bears. That's stress. And when people are so split, it only takes one spark to get everyone to move in the same way. That's when your moves go sideways. As shorts rush to cover, longs pile in, and cash that has been blocked comes back into the game. Take a look at XRP's past. There were no happy times during any of the big moves like the ones that went from $1 to $2 to $3. The big rises always start in confusion. That is exactly the background we see now. Stress, uncertainty, and tiredness. In other words, the stage is set. Let's look at the levels. XRP has strong support around 272.80, which has held multiple times. There is still resistance around 320. If there is a clean rise above that level with volume, the price could move up toward the mid threes. Right away, it is possible for that kind of move to happen now that a Fed event is coming up. When you add in institutional action and larger crypto flows, you get a situation where fundamentals, macro, and technicals all line up. Those don't happen often. Now, let's look at the bigger picture of the crypto world. Bitcoin's popularity is what keeps the market going. Altcoins often follow Bitcoin's rise slowly at first, but then quickly catch up. When Ethereum joins, it adds fire. Another major that makes waves go farther is Avalanche. XRP has shown that it can sometimes be in the lead, like after big news like the SEC case was made clear, but it also goes with the flow of the market as a whole. In other words, you have to pay attention to Bitcoin. And the fact that Bitcoin is still above key longer-term supports after an 11% drop is not bearish. It is positive. Something else to watch? Data on the chain. When whales take assets off of exchanges and store them privately, the amount that is available goes down. That's a good sign. It means strong belief for a long time. We've seen the same thing happen with XRP lately. There is less stock on the exchanges, so when demand comes back, the move can be stronger and happen faster. This isn't just theories. Supply and desire are the basics. When liquidity is low and demand is high, prices respond too strongly. In the meantime, businesses and governments keep adding Bitcoin. The fact that public businesses hold more than 1 million Bitcoin is not just a fact, it's a message. Adoption is a fact. Scarcity is getting worse. And the same wave of acceptance that brought Bitcoin into boardrooms is starting to hit XRP through its real-world uses. It's happening faster than most people think. Okay, let's make this clear. XRP is holding steady below $3, and it's clear that more people are buying it. Bitcoin is fixing itself but keeping its structure. Ethereum is down, but things like L2 scaling and ETF stories are starting to happen. Reverse repo is losing liquidity, which is putting pressure on the Fed to cut. There are almost 95% chances of a cut, which means the market already thinks it will happen. Since institutions are pulling XRP off of platforms, there is less pressure to sell. Fear and greed are also at a neutral level, which is ideal for a breakout. All of those things are important on their own. These two situations are one of the least even we've seen in months. That's why it's so important to pay attention now. Because the chance window won't stay open for long once the trigger is set off. I'd like to take a quick break now. Personally, I made something for people like you who don't just want to watch these moves from the sides, but also want to get ahead of them.